Ray Dalio doesn't usually speak in extremes. He's calm, calculated, and known for making decisions based on principles, not panic. But in 2025, something's changed. He's warning that most investors are walking straight into a financial trap, one that could wipe out their wealth slowly and silently. The reason they're ignoring 5 assets, not stocks everyone's hyping on social media, not crypto moonshots. These are timeless, quietly compounding assets, the kind that don't make headlines but do make millionaires. If you miss them now, there's a real chance you'll spend the next decade catching up. Most people want wealth fast. They chase noise, trends, and whatever's flashing on their feed. But Dalio's playbook isn't about predictions, it's about principles. Long-term wealth means surviving inflation, downturns, even currency collapse. It's not about riding waves, it's about owning the ocean. That's the difference between speculation and productive ownership. One looks rich for a while, the other stays rich forever. And before we dive in, if you're serious about building long-term wealth, drop a comment below saying, "I'll be the first trillionaire in my family." I'll heart your comment when I see it. And if you'd like to support this channel, hit the like and subscribe buttons. It takes less than a second and helps the channel a lot. We've got plenty of inspiring content coming your way, packed with tips to help you live a more successful and fulfilling life. All right, now that you've commented and subscribed, let's dive into the 5 wealth-building assets Ray Dalio believes will separate those who thrive in 2025 from those who struggle. And trust me, asset number 5 is the one most people completely overlook. Now, what Ray Dalio says about the 5 assets that will make you rich in 2025. Number 1, productive equities that beat inflation. If your investments aren't beating inflation, you're not building wealth, you're silently falling behind. Every day when I reflect on my journey in the world of investing, I recall the lessons learned from those who dared to look beyond fleeting market trends. There was a time when I too chased after the allure of quick profits, dazzled by flashy headlines and the promise of sudden wealth. Yet, with each setback, I came to understand that true wealth is not built on momentary excitement, but on the steady, deliberate growth of productive equities that defy inflation. These are not just numbers on a screen. They are living testimonies of companies that generate real value, fueled by sound business practices and unwavering resilience. Imagine a company that, like a master craftsman, steadily builds its future. Every day, rather than being swayed by the noise of short-term market fluctuations, it operates with purpose and precision, reinvesting profits to fuel continuous innovation. This is the essence of productive equity, a tangible embodiment of value creation that outpaces the slow, insidious erosion of inflation. It is as if every dollar invested becomes a seed planted in rich soil, destined to grow into a robust tree that not only withstands the storms, but flourishes in their wake. Investing in such companies requires a profound shift in perspective, a move away from chasing the ephemeral lure of short-lived gains toward embracing a vision of enduring prosperity. It is about nurturing the steady accumulation of value that compounds over time, much like tending a garden where each carefully planted seed matures into a flourishing harvest. This approach transforms your identity from that of a risk chaser to a patient builder of lasting wealth, setting you on a path that defies the relentless force of inflation. In a climate where inflation gnaws slowly at the value of your money, these equities emerge as fortresses of stability. They represent investments in companies that consistently reinvest in themselves, harnessing innovation and maintaining a competitive edge that not even the harsh winds of economic downturns can erode. Just as a sturdy structure is built to withstand storms, so do these companies shield your future against the corrosive impact of devaluing currencies. Their power lies in transforming challenges into opportunities, turning market adversities into building blocks for long-term growth. Every investment in these resilient companies is a deliberate act of faith that by aligning your capital with entities that continually innovate and reinvest, you are choosing a future where value creation trumps the erosion of time. It is a commitment to a strategy that builds wealth quietly but powerfully, day after day. Regardless of the fluctuating sentiments of the market, this philosophy reshapes every financial decision, empowering you to rise above short-term noise and build a portfolio that reflects your core values. It transforms you from a passive observer into an active architect of your destiny. ensuring your wealth flourishes despite economic uncertainty, and secure your financial freedom forever. Now that you know how to grow wealth, let's talk about how to protect it, even when prices surge everywhere. The next asset, real estate, but not the kind you're thinking of. Number 2, strategic real estate. It's what if your wealth was tied to something the world can't live without, Evan? During a crisis, while others chase flashy investments, the smart money is quietly flowing into real estate that doesn't just sit there. It works for you when everything else breaks. Most people think of real estate as a physical investment, bricks, land, rental income, but Ray Dalio sees it as something far more strategic. He sees it as a way to anchor your wealth to reality when financial systems begin to unravel. In 2025, when currencies are weakening, when governments are stretched thin and interest rates are dancing on a knife's edge, it's not just about owning property, it's about owning the right kind of property in the right places for the right places, for the right reasons. And yet, too many people are still lured by cosmetic upgrades and market fads. They're seduced by beachfront condos and urban buzz without asking, will this still matter when things change? Strategic real estate isn't glamorous. It's not meant to impress your peers at dinner parties. It's meant to keep generating value when systems shift, when currency devalues, when governments inflate away their obligations, when volatility spreads like wildfire. Dalio urges investors to prioritize utility. Does the property serve a function that remains essential regardless of the economic weather? Housing, logistics, data, infrastructure? These aren't just sectors, they're lifelines. When everyone's chasing luxury high-rises in saturated markets, the real wealth is quietly compounding in places where the fundamentals still breathe. Scarcity, functionality, resilience, those are the filters that matter. Real estate becomes strategic the moment you stop chasing trends and start asking hard questions. What happens if the dollar weakens? If interest rates spike? If a local government shifts tax policy overnight? Strategic real estate can absorb those shocks. It isn't tethered to one fragile system. The right property becomes a buffer, a source of stable income when paper assets start to wobble. This isn't about fear, it's about foresight. When you own property that people need, not just want, you aren't speculating, you're securing leverage in a world that's constantly renegotiating its rules. Think about the difference between land that feeds people and a condo that depends on Airbnb bookings. One produces essential value. The other relies on discretionary income. When cycles tighten, people cut vacations, not food or logistics. Dalio's approach reframes the way we look at shelter, not as a luxury, but as a productive utility. That's where the shift in thinking happens. You begin to see property not as status, but as structure, something built to endure more than just market swings. It becomes infrastructure for your financial resilience. And location. How often do people overlook what it truly means? They see a bustling city, a hot zip code, and assume strength. But Ray looks for more than momentum. He looks for jurisdictional safety, economic balance, and societal stability. What's the local debt load? How business-friendly is the tax code? Are there political risks bubbling beneath the surface? Most never ask these questions until it's too late, until policies shift, liquidity dries up, or borders tighten. Strategic real estate demands a mindset of permanence in a world that's increasingly impermanent, because at the end of the day, real estate isn't just about owning something tangible. It's about placing your capital in ecosystems that won't betray you when the winds change. It's about owning time, access, and relevance. When others panic and scramble to preserve value, you want to be holding the kind of property that the world still needs quietly, persistently, and without apology. That's the real estate that builds wealth. That's the kind that outlives chaos. And that's what separates comfort from power. But even the most strategic property can't shield you from one silent killer of wealth: currency erosion. Because when inflation rises and your dollars silently lose value day by day, you need more than physical assets. You need protection that moves with the tide. That's where the next asset comes in. Number 3, global diversification and currency resilience. When everything feels uncertain, when prices are rising, currencies are weakening, and headlines scream crisis, most people panic. They clutch onto cash, thinking it's safe, but they don't realize the value of that cash is quietly vanishing. It's not the zeros in your account that matter, it's what those zeros can buy. And when inflation creeps in like a slow leak in a tire, you don't feel it right away. But eventually, you wake up one morning and realize that what used to cover a week of groceries now barely gets you 2 days. That's the trap. You think you're being cautious, but in reality, you're bleeding value. Ray Dalio has warned us about this over and over again in times of monetary stress. Holding the wrong assets can be just as dangerous as making no decision at all. Most financial assets are promises. A bond is a promise. A bank deposit is a promise. Even your local currency is just a promise backed by faith in a system, a government, a central bank, a set of policies that may or may not hold steady. But what happens when that faith erodes? When debt climbs past the point of no return? When central banks start printing not to grow the economy, but to plug holes, those promises start to break. Slowly at first, and then suddenly. That's why Dalio and other seasoned investors turn towards something different during turbulent times. Assets that are not someone else's liability. Inflation-protected bonds and tangible strongholds of wealth don't rely on perfect economic conditions to hold their ground. They're not based on future earnings, they're based on present, real-world value. Bonds indexed to inflation don't get eaten alive when prices rise, they adapt. And then there are tangible assets like gold. Not because gold sparkles, but because it doesn't need a signature or a balance sheet to justify its worth. It has held value through wars, collapses, and centuries of human error. That kind of reliability isn't romantic, it's survival. It's what allows you to stay grounded when everything else feels like it's floating in quicksand. And here's what most people miss. These assets aren't supposed to excite you. They're supposed to protect you. Their strength lies in what they don't do. They don't default. They don't vanish overnight. They don't need a booming economy to stay relevant. When the system shakes, they stand still. And that stillness, that steadiness, becomes your anchor. It gives you clarity. It gives you time to think, to plan, to breathe. Because while everyone else is reacting, you're preparing, you're preserving, you're buying yourself freedom. In a world where most people are selling theirs out of fear, there's a certain calm that comes from knowing your wealth doesn't vanish with a headline. That's the power of having part of your portfolio in storeholds that don't flinch when the system does, but if you stop there, you miss the next layer of resilience. Not just what you hold, but where you hold it. Because sometimes the system itself is the risk. And that's why we now turn to one of the most overlooked factors in building real wealth, where in the world your assets actually live. Number 4, global diversification and currency. Putting your entire life savings into one single building. One city, one neighborhood. On the surface, it looks safe. But what if a storm comes? What if the economy tanks, or leadership changes overnight, or the rules shift beneath your feet? That's the quiet risk so many investors take every single day, not with buildings, but with their portfolios. Concentration, and Ray Dalio has made it clear. In an interconnected but unstable world, tying all your wealth to one currency, one country, one government, is a bet few can afford to lose. It's not just about having international stocks or some offshore exposure, it's about understanding that every system, no matter how dominant, is vulnerable to its own blind spots. Currencies aren't just pieces of paper or digital numbers. They're symbols of trust that a government will behave responsibly, manage its debt, honor its obligations. But what happens when that trust fades? What happens when that same government starts printing money to cover deficits, or when political chaos disrupts markets? Suddenly, the dollars you thought were safe start losing value, not in headlines, but in what they can no longer buy. It's not theoretical. It's a slow erosion, invisible at first. The same amount of money, buying less each year, without you noticing until it's too late. Dalio calls this the silent killer of wealth, and it's why geographic diversification isn't a luxury for the rich. It's a necessity for anyone who wants to stay solvent in an unpredictable future. Think about how economies move in cycles. While one nation struggles with recession, another may be booming. While one central bank is tightening, another might be easing. This isn't just triviates opportunity. Spreading your assets across different economies, monetary policies, and regulatory systems gives you access to growth you wouldn't find at home, and protection from downturns you can't predict. It's not about betting on foreign markets, it's about protecting yourself from being overexposed to any single failure. Because when a country's system breaks, it doesn't ask permission before taking your wealth down with it. And the truth is, most people never think about this. They feel safe simply because they're used to the system they live in. But being familiar with something doesn't make it safe. In fact, that comfort can be dangerous. It can lull you into believing the ground beneath you is solid, even as cracks widen. The smartest investors see through that illusion. They don't place blind trust in any government or single economy. They spread their risk across borders, currencies, and cycles, not to chase gains, but to survive the storms that inevitably come. If you want lasting wealth, not just in numbers, but in security, you need to think globally. It's not about fear, it's about responsibility. Because the moment you stop depending on one fragile system is the moment you begin to build true financial resilience. But even that protection means nothing if the person managing your wealth, you, doesn't know how to think clearly. In the next section, we'll explore the one asset more valuable than gold, more powerful than stocks, your ability to adapt, learn, and make decisions when others panic. Don't miss it. Number 5, most people spend their lives searching for the next big investment, the next breakout stock, or the next hot real estate deal. But what if the greatest asset you'll ever own isn't listed on any exchange? What if it's something no market crash can steal, no inflation can devalue, and no government can regulate? Ray Dalio, who's built one of the most successful investment firms in history, says the most powerful form of compounding isn't financial internal lits. It's your ability to think clearly in chaos, to adapt when the rules change, and to learn faster than the world crumbles, because the truth is, no matter how many assets you hold, if your thinking is flawed, your outcomes will be too. And in a time where certainty is rare and noise is everywhere, the person with clarity becomes unstoppable. Ask yourself, when was the last time you truly upgraded your way of thinking? Not just read a headline or skimmed a blog post, but challenged your own assumptions, listened deeply to opposing views, and sharpened your mental tools like your future depended on it. Because it does. In 2025, complexity is compounding. Markets shift faster than narratives can catch up. What worked last year could bankrupt you this year. If you're rigid, you fall. But if you're flexible, you commit to learning how systems truly work. You move through chaos with confidence. That's not intelligence, that's intention. The investor who survives isn't always the one with the best strategy. It's the one who updates their map when the terrain changes. The danger isn't ignorance. It's the illusion of knowledge. People with the most confidence often make the worst mistakes because they stop asking questions. They start defending beliefs instead of refining them. But when you let go of being right and start being curious, something incredible happens. You stop reacting from fear and you start responding from principle. And in investing, that's everything, because the worst decisions don't happen in bad markets. They happen in panic. They happen when someone doesn't understand what's happening and lets emotion take the wheel. But the investor who has trained themselves to stay grounded, to remain centered, while others spiral, has a built-in edge. It's not about being smarter. It's about being still enough to see clearly when everyone else is blindfolded by their feelings. And this isn't just about money, it's about freedom. When you understand how things work, how incentives drive policy, how debt affects growth, how interest rates shift global flows, you stop feeling like a victim of the system and start acting like a player in it. You become less reactive, more strategic. You stop chasing and start constructing, and construction lasts longer than hype. Your ability to learn is your hedge against irrelevance. Your willingness to evolve is your protection from obsolescence. And your mindset, that's the infrastructure every other asset depends on. Because in the end, the real wealth isn't in what you hold, it's in how you hold yourself. When you build that kind of resilience, you don't just protect your future, you shape it. You become the kind of person who doesn't flinch at volatility, who doesn't fold in the storm. You become antifragile. And that's why Dalio says, if you're not investing in your own clarity, your own adaptability, your own mental flexibility, then no amount of money can save you. Because without that, you'll mismanage even the best portfolio. So before we get to Ray Dalio's final messages, closing warning, and blueprint for antifragile wealth, Wealth, ask yourself one thing. Are you prepared to evolve, or are you just hoping to survive? Because the next 5 years won't be won by the loudest or the luckiest, but by those who learn fastest, adapt deepest, and act from truth, not trend. Stay with me. What Dalio shares next could change the way you think forever. It's easy to believe that building wealth is about chasing the next hot trend, timing the market perfectly, or outsmarting the system. But Ray Dalio would tell you that real wealth-lasting, unshakable wealth isn't built on noise. It's built on principles. The kind that don't change with headlines, elections, or social media hype. Not shouting, he's warning. And when Ray speaks quietly, you should listen loudly. Because beneath the surface of today's market optimism lies a system under pressure. Global financial machine stretched by debt, volatility, and geopolitical imbalance. Dalio has lived through these cycles. He doesn't trade emotion, he trades patterns. And if there's one pattern he urges us to see clearly, it's this. Most people are preparing for yesterday's economy, not tomorrow's reality. They keep their cash where inflation eats it. They invest in bubbles dressed as innovations. They follow loud voices instead of wise ones. And slowly, silently, they bleed the opportunity they didn't even know they had. To be one of them, you've already done the most powerful thing. You paid attention. You learned. You stayed until the end. And that alone separates you from the masses. Wealth isn't about stacking dollars. It's about stacking decisions. Every choice you make, from what you read, to what you invest in, to what you ignore, it shapes your future. Your portfolio isn't just a reflection of your money. It's a mirror of your thinking. And that's the real game. That's what Dalio means when he says the greatest asset you'll ever own is clarity about yourself, your goals, your blind spots, your emotional triggers. And when you invest wisely, you win. If this video added value to your life and you're excited to make the most of it, I'd love to hear your thoughts. Please share your feedback in the comments below and include the phrase, "I watched the video till the very end," so I can give you a heart. To continue your journey to success, there are 3 important steps you need to take. 1. Like this video. 2. Subscribe to this channel. And 3. Turn on the notification bell. That way, you'll never miss the real investing wisdom we share from legends like Dalio. All I ask is your subscription, and I sincerely appreciate it. Creating content like this for you is our passion. Your support helps us continue this mission. Thank you for watching, and remember, in a world chasing shortcuts, you chose clarity, and that makes you the real wealth builder.